The first bank in history. How the Romans invented finance. Before modern banks existed, before anyone understood what deposits, loans, or interest truly meant, Rome was quietly building the foundations of a financial system that would change civilization forever. In the heart of the Roman Empire, where gold flowed from the east and taxes poured in from every province, an idea was born. Not just a treasury, but a machine capable of moving wealth itself, the bank. The Romans weren't the first to use money, but they were the first to realize that money could work, that it could move, grow, and multiply without ever leaving one's hands. In the crowded markets of Rome, merchants from across the Mediterranean came to trade, and they needed a safe place to store their profits. That's when a new kind of man appeared, the Argentari, the money changers. They sat behind silver tables in the forum, weighing coins, exchanging currencies, and carefully recording every transaction on wax tablets. But the Argentari did more than safeguard gold. They started lending it. Roman citizens deposited their money, and the bankers used those funds to lend to others, charging interest. Over time, they developed detailed account books, the first form of financial records in history. At first, loans were simple, a farmer needing funds for his harvest, or a trader financing a shipment to Greece. But as the empire expanded, so did the system. Soon, the bankers were lending to the state itself, financing roads, ports, and even military campaigns. Rome was no longer ruled only by swords. It was ruled by numbers. And where there's money, there's power. The Senate began regulating interest rates, setting rules for contracts, and monitoring speculation. By the 1st century BC, men like Marcus Licinius Crassus, the richest man in Rome, were making fortunes not from war, but from real estate loans. He would buy the homes of fire victims for almost nothing, then lend them the money to rebuild, at a profit. He understood something few did at the time. Money could create money. As the empire grew, so did its financial web. Banks spread across the provinces, from Alexandria to Athens, from Carthage to Jerusalem. Transactions were recorded, funds were transferred, and debts settled without the gold ever moving. The Romans had invented a decentralized financial network nearly 2,000 years before the Internet. But, as always, where money multiplies, greed follows. By the end of the Republic, Rome was drowning in debt. Loan sharks preyed on the poor, and interest became a tool of control. Julius Caesar himself had to freeze all debts during a financial crisis that nearly collapsed the Roman economy. When the Republic fell and the empire rose, money came under central authority. The emperors established the aerarium, the public treasury, and later the fiscus, the emperor's private fund. Together, they became the most powerful financial institutions of the ancient world. Rome financed its legions, paid its officials, and even borrowed from its own bankers, a system that would echo in today's central banks. Though the empire eventually fell, its financial legacy never died. Every modern bank, from London to New York, carries in its veins a fragment of that Roman invention. They didn't just invent coins or credit. They invented finance as a force of civilization. Rome turned gold into an idea, the idea into a system, and the system into a legacy that still shapes the world today. The story of the first bank in history is not just about money. It's about the moment humanity learned that power could exist on paper.